Hey, it's Andrew Falde, and this is a lecture on 7 values for your trading career. This is a topic on psychology. These are going to be 7 ideas given in the form of a comparison. 2 mindsets, 2 attitudes, one being the preferable over the other, and a little discussion about what these look like and why it's important to keep these in mind. I suggest that you take the associated PowerPoint. This presentation should be available with this. If not, please reach out and ask for that. Take these and schedule time to review them. Just a quick read over should take no more than a minute or two, and look for areas where you are not following these values. These values are not being applied to your trading. And think about them, meditate on them, revisit them often, and see if you are off on any of these. And keep a journal, write that down, and I hope this helps you a lot. First one is curiosity over anxiety. We'll begin with the common emotion, common psychology, which is the second one. So what we're trying to achieve over something that would be more natural, something that would be common to experience. So we'll discuss what's common to experience and what you should aim for instead. Anxiety or fear often can come in any form of trading. With trading, there is always uncertainty. There is always the positions and chance, not the chance actually, it's the reality. It is the absolute truth. You will have trades and positions that do not perform as you hoped, first of all, and sometimes even as you expected. Or they may change on you, where they had been doing well, everything seemed to be going fine, and then things are no longer that way. And so that builds up anxiety. Is this single trade going to work out? If I keep doing this type of trade, will my trading work out? If I can't find something that does work, will my career work at all? And all of these thoughts build up simply because of uncertainty and simply because things don't go as planned. So what should we have instead? Instead of anxiety building up and fear building up and happening to us because of that, you can't get rid of the uncertainty of the results. So you have to change your mind. If your mind is fixed on curiosity rather than anxiety, then you will be focused on a positive and progressive mindset. Curiosity means you are thinking about why is it this way? And you take the words of what if this doesn't happen, you remove those and you replace them with words more like, this is interesting. Why is it happening? What can I do about it? Is there something else that I could be doing differently that would improve this result? And it becomes a curious, never-ending seeking for improvement rather than fear that what you have done so far isn't going to work. Rather than worrying about what you've done to date, always push forward into what you can do next, what you can move on to improve. So use it as curiosity on a very practical level for a specific trade or position that you are in. If you feel anxiety or fear building up as you look at the position, take a mindset of, I just wonder what this trade's going to do. It will be interesting to see if this is a loss. That will just simply be interesting to you. The words you pick, the words you choose, the words you use make a big difference. If you say, I really hope this trade doesn't close out at a loss. I really hope it doesn't turn around and I lose this win. If you think in those terms, then you will be focused on the fear. That fear will build up and it will make your trading much more challenging. If you just take a passive interest in wondering what will happen this time, and if it's a loss, doesn't matter. If it's a win, doesn't matter. Don't allow fear of loss to get you built up with anxiety and trading poorly. So choose curiosity, choose a passive interest in the result, choose a mindset of seeking improvement for improving the future results rather than fear about what your decisions are going to mean this time. Secondly, community over loneliness. Traders often feel like they are lone wolves, that it's all up to them to find their way through the markets. If you are a systematic trader, it can be tempting to think that your system should be kept a secret, that nobody should know what you're doing, and that can leave you in a place that's very lonely, in a place where there's not objective feedback, which can be very valuable for you. Instead, choose community. That's a reason why prop firms are some of the most successful environments, and the environments that produce the most successful traders is because there is constant sharing of information and feedback, and in a good way, comparing one another and the performance of each other across the board. That may sound like it's something that's counterintuitive or competitive or distracting, but that's actually a positive thing that you need to try to emulate as best you can. If you're a remote trader or if you're in a firm, keep that openness and that sense of community. Having a sense for where you rank within a lineup of other traders and how your performance is can give you very important context about how well you're doing and what the opportunity is. If you're a highly successful trader, that will give you confidence. It will give you the opportunity to teach, and through teaching, you have a better opportunity to improve yourself. If you rank somewhere in the middle, you can still feel very positive about your status and your achievement as a trader. And if you're near the low end, you can look around and model what you see. Find what the successful traders are doing and directly compare it to what you do. From psychology to decisions to duration of holds to underlying instruments to strategies, your lifestyle patterns, your health, everything that you possibly can. Compare yourself to those who are successful in a way that allows you to make a plan to improve. Not just to copy or try to become somebody else, but to model those behaviors, model those actions so that you can apply them in your own way. Rather than being on your own, where you only have yourself to reference to, get yourself into a community. Third, accountability over distractions. It is very common for traders to find the next shiny idea and chase it and study it and think about it and start trading it, to see a newsfeed announcement, find something and go switch over what they're doing, trade something else, watch a webinar, hear about a new trading technique, hear about a new indicator, see somebody else using a certain indicator, deleting all your indicators, putting a new one on. There's all these things that cause you to, with no amount of time and study and preparation and consideration, to just flip a switch and try something else. And those are distracting things. There's no reason why you can't change and move on to other things. But when you do it through a quick, reactive process because you see something and then you go after it, and you see something and you go after it, if you catch yourself doing that, the way to get away from that is not just to block out distractions or not just to stay focused. That's why this slide does not say focus over instead of distractions. Be focused instead of being distracted. It's accountability over distractions. Have accountability to someone. And accountability to someone can look like a lot of different things. It can be a personal relationship. It can be a mentor or a coach. It can be a person who you manage money for or the firm itself. But expressing to somebody the logic of what you are doing and what you're trying to do, at whatever time frame it makes sense. If it's a systematic trade, you express the rules of the trade. You say this is what you're implementing, and you ask for accountability for your execution of it. Not necessarily accountability for the results. That is preferred. That is something you're aiming for. It's a clear objective. But just accountability for executing it consistently. That is something traders want more than actual profits itself. Profits come later. Usually the shorter term goal before profits is just to become consistent at doing something over and over again in a certain way, because the random distractions and chasing after things is what prevents that consistency from being possible. So if you develop accountability to yourself through documentation, to somebody else through communicating and documentation, and a regular visit back to the thing you have committed to, and then a discussion, and then a slower process towards making changes, rather than sudden decisions that this is not what you intended and this is not what you really wanted, and then you change it. Go slower through those things and work with somebody else before you jump into those. Next, endurance over adversity. This brings us to just over the halfway point, or right at the halfway point. Endurance over adversity. So speaking of endurance, we're just about we are halfway through now. The 7 values for the trading career. And so sticking with something, sticking with an education process, sticking with a trading plan, sticking with things is very difficult even without adversity. And adversity is what you have signed up for as a trader. You have absolutely signed up to have adversity come to you from the marketplace, which is on its own and does not care about what you're doing. So you must have endurance, you must be committed, and you must move forward. This does not mean to fight against. We're going to talk about that in 2 more of the values, two values from now. But this is about keeping on through adversity, not giving up, not quitting, and not checking out, not quitting on an idea when there's not been enough valid information for you to be told to quit, but to remain somebody that has endurance as the adversity comes. Do not use adversity as a reason to stop. You need better reasons to stop what you're doing than just the fact that it's hard. It can become easier as you get better. It can become easier as you change your psychology. It can become easier as you hone what you're doing. So keep the endurance up as you figure those things out and hone your way into making the experience better, whether it's just internal or whether through it's through the actual practice of what you're doing. Remain somebody with endurance until you've gathered enough information that you have been traveling down the wrong path and you need to switch what you're doing, go on to something else. And do that through the accountability that we just talked about as well. Third from the final here, patience over greed. So greed can often be deviations from your plans because of, 1, new opportunities revealing themselves that were not part of your plan, or 2, quick wins or small amounts of wins where you just want to secure them and walk away and feel like a winner. So greed can just be taking smaller amounts to feel like a winner, or greed can be thinking the opportunity is better than it is and putting in too much. Greed can be leaving one opportunity to go for another without enough information that that's a good one. So a little deeper into each one of those. Believing something is a better opportunity than it actually is not patience because you're trying to achieve the high level results, you're trying to achieve the annual income, you're trying to achieve the monthly income and the status and the account size that you're not ready for faster than it would happen if you took the appropriate size for the opportunity. So outsizing your trades out of greed means you are not being patient about letting the results accumulate as they should and as they are going to be available, and as is a methodical and logical process to build up your trading career and your account and your results. So do not be impatient with that. Secondly, taking profits off quickly in order to just feel like you're a winner, to just take the win and settle the anxiety and the uncertainty that's in your mind that we also discussed recently. To just settle that out to call yourself a winner is to not be patient and let the trade work out. Let the trade work out instead of just checking off a box that you're a winner for that trade. Let it work out. Let it be a loser. Let the edge work, or else you're trying to solve a problem that is not going to give you the result of positive trading results. The problem you're actually trying to solve is you just want to feel like a winner. The real goal that you have underlying behind the entire process of trading is to be a great trader with great rewards for that. And by just wanting to feel like a winner is not related to being a great trader. So let the patience of letting trades work out so that you can actually achieve your real goal there. Second from the end, and this ties in related to our endurance over adversity as a balancing point. So endurance, when things are hard, needs to be balanced out with this idea. That is humility over willpower. Willpower is believing that your strength, your resolve might have an impact on the market. And this is a very dangerous thing, and it happens often for people who have been successful in other areas of their life. If you're successful in school or sports or business or a prior career, and you've done that through willpower, you've done that through, as an example, let's use a prior experience or prior career as a salesperson. And you use willpower to keep pushing harder, and talking people out of their objections and moving them towards sales. And through willpower and extra effort and longer amounts of time and studying the potential client more and visiting them more often, through willpower and effort, you created a result. If you try to bring that into trading, you will be destroyed. Your account will be destroyed. Willpower does not affect the market. You cannot have willpower and resolve and effort and smooth talking and anything else that would allow you to influence the trade you are in. It does not work. Instead, you have to have humility to just let things work out, to be the participant only in the market. As only a participant, you are passively observing the end result and actively participating in your position within what the market will do. At some point, you can trade with enough size or situation where you can temporarily affect pricing. But if you are going to depend on that alone, then you do not really have an edge. You are a participant who must be humble with the fact that the market acts independently of your resolve and willpower. And finally, simply elegant over highly intelligent. Many traders can believe and fall into the false belief that what they do has to be more complicated or more difficult to understand than what everybody else is doing in order for there to be an edge. And that's simply not true. Pursuing simple elegance, to be simply elegant, means that you just understand the fundamentals, not as in the fundamentals of a company, but the fundamentals of markets, market behavior, market action, the participants in the market, what their goals and objectives and fears and greed is causing as far as an opportunity, and your participation in that can be a very elegant and simple to understand thing that you precisely come in and execute in a way that is efficient, that is cost efficient as far as your execution costs and commissions. You're able to execute, you're able to get in and out, you're nimble enough, your size doesn't impact the market. You can find edges where somebody's size is impacting the market and causing a problem for them, and that becomes an opportunity for you. You can find very simple, elegant edges in the market that you can participate in, and that can be very distracted, or let me rephrase that. It's very different than trying to find a very, very precise key that unlocks some secret in the market. That is not where true edges and long-lasting edges lie. That is where false realities, false statistics lead you to believe you found something special that may or may not be special, but probably won't be special for very long no matter what. Finding simple, elegant edges that you can participate in where you understand market forces and you can actually explain it simply to yourself and to others, and you can execute it with a moderately sized plan of your sizing and your entry and your exit and your management, and the variables of what causes good trades to be selected out of all possible trades. That is where you will have a more long-lasting career and true edge that you can implement. So these have been the 7 values for your trading career. There are many more values that you can have, but this is 7 that I've summarized specifically that I wanted to share with you here that I do think are applicable for traders, especially intermediate term traders and independent traders. So please, as I said, download the PDF or the PowerPoint of the slides that came with this, save it somewhere, and set a time, either days from now, weeks from now, where you come back and you just quickly scan through these and decide where are areas that you are struggling with, and write it out. Maybe change the words, make the words more meaningful and impactful for your specific situation, and make a plan to improve your values for your psychology to improve your trading career. Thanks for watching.